How much does a surety bond cost? This is the second most asked question we get. The first is, what is a surety bond? Watch our video, click on it in the upper right hand corner that explains what a surety bond is and why it's required. So how much does a surety bond cost? It depends on three factors. Number one, the type of bond you need. 2, your personal credit and business experience. 3, where you purchase your surety bond. Factor 1, the type of bond you need. There are thousands of different types of surety bonds spanning hundreds of different business categories. Some bonds have fixed prices. Examples of these bonds are notary bonds, public adjuster bonds, credit repair service bonds, sales tax bonds. Some states like Oregon, Nevada, Texas, New York, among others, have fixed prices on certain contractor bonds. These bonds generally have a lower bond amount and carry less risk for the surety. Here are some examples with real numbers. A notary bond in Arizona costs $40 and is good for 4 years. A $10,000 public adjuster bond in Texas costs $100 for a 1-year term, $175 for a 2-year term, and $250 for a 3-year term. A $20,000 residential general contractor bond in Oregon costs $190 for a 1-year and $342 for a 3-year term. To find out if the bond you need has a fixed price, visit suretybondsdirect.com. Use our bond finder form, and if it does have a fixed price, you can purchase it right online. Some bonds require underwriting. These types of surety bonds take us to Factor 2, your personal credit and business experience. Common examples of bonds that require underwriting are most contractor license bonds, mortgage broker bonds, auto dealer bonds, freight broker bonds, and many, many more. The cost of a surety bond requiring underwriting depends on 3 things. Number 1, your personal credit. Similar to getting an auto or home loan, your personal credit plays a large part in the premium rate quoted by the surety. We're going to look at some examples with real numbers in a second, so keep watching. Number 2, business experience. If you've been a licensed contractor or owned a used car auto dealership or just been in business for a long time, that experience can help lower the rate on your bond. If this is the first time you're required to purchase a surety bond, you may not have business experience, but you probably have industry experience. And while this experience does help, just remember your personal credit is the primary driver that's going to determine the cost of your bond. Number 3, prior bond claims. If you have prior claims against previous bonds, the price of your bond now is likely to be higher. But no matter what, try to prevent claims by working with your customers before anything escalates. Let's go over some examples with real numbers. You should know the bond amount you need. If for any reason you're confused or you don't know, just call Surety Bonds Direct and speak with a bond specialist. They'll be able to help determine the actual bond you need, and most of the time this comes with a set amount. The rate is the percentage of the bond amount called the premium. The rate multiplied by the bond amount is the price you pay for your bond. So the lower you can get your rate, the lower the price you pay. The rates we're going to use in these examples are for easy math. We routinely see rates below 1%. In North Carolina, used auto dealers are required to purchase a $25,000 bond. If you were quoted a 1% rate, the premium, or the price you pay, would be $250. With poor or limited credit, you may be quoted 3%, in which case the price you pay would be $750. Another example, in Florida, travel agents are required to purchase a $10,000 bond. Similar to the example above, if you were quoted at 1% rate, your price would be $100. With limited credit history, you may be quoted 5%, in which case your price would be $500. Just remember, these rates are used for examples, and they routinely go from below 1% to above 5% depending upon the given situation. This rate is why Factor 3 is so important. Factor 3, where you purchase your surety bond. To get the lowest possible price for your bond, use a specialty surety agent like Surety Bonds Direct. Every surety is going to look at your personal credit and experience and do their own assessment on it. It's our job to shop and get the lowest possible rate based off of your personal credit history, experience, and any prior claims, if that's even a consideration. As a national specialty surety agency, we work with multiple sureties to get the best prices for our customers. Let's recap. The price of a surety bond varies depending on, number 1, the type of bond you need, 2, your personal credit and business experience, 3, where you purchase your bond. Let us price shop for you. We'll do what we do best, find you the lowest possible price. Once we find the best price, we'll send it to you in a firm price quote, no obligation, no charge. If you have any questions about surety bond costs or pricing, ask in the comments below. If you're ready to get your bond now, go to suretybondsdirect.com. You can request a free quote online, or if you'd rather speak with somebody, you can call a bond specialist. Thanks for watching.